day. I'm Chartered, your accounting tutor. In today's video and class, we are going to continue with end of accounting period adjustment to financial statement of a sole trader. And mind you, if you are following me, discover that we already treated the first one, which is closing inventory. Today, we are going to look at the second one, which is called accrued expenses. Accrued expenses. These are expenses that we already enjoy but yet to be paid. These are other names that are attached because sometimes an examiner will decide to use any name, but whether any name is used, you should be able to know that we are still talking about the same thing. Look at, you can call it accrued expenses, or you can call it expenses in arrears. Expenses in arrears, or you can call it expenses outstanding, or you can call it expenses due but not paid, or you can simply call it owing. So any of these names apply, we are still referring to as the same thing, which is accrued expenses. Accrued expenses, how are they treated? Accrued expenses, by simple understanding, these are expenses incurred in accounting period but yet to be paid. You already enjoy the services for the expenses from the beginning of the accounting period to the end of the accounting period, and you have not paid it all, or you have not even paid it at all, or you pay part of it. That is what is called accrued expenses. Accrued expenses are divided into two. These are areas where most learners believe that we have only one type of accrual, which is accrual at the end of the year, which are normally added. But there are also other type of accrual, that is accrual of the previous year. These are the common accrued expenses we have. Number one, we have accrued expenses of the previous period. This is accrued expenses that was already owed in the previous accounting period, brought forward in the current year. In this type of accrual, you are not expected to add it up, as all learners know that accrued expenses are added. If you add it up, it is not correct. So if the question, the alternate function state clear that the accrued expenses or expense arrears are in respect of the previous year, you are not expected to add it. Get me right and clear. So what you do is that if accrued expenses are that of the previous year as reported in alternate function, the only thing you can do is to deduct it from the actual amount given in the trial balance. So this is the first aspect of it. The second aspect is the common one, which all learners think it is there, whereby we say accrued expenses of the current period. That is the accrued expense at the end of the current period the question is concerned with, or the business is treating. So such accrued expenses, this is the common one that everybody knows that they are added. So if there's any accrued expenses of the current year, the simple way is to add the amount that is accrued to the actual amount paid in the trial balance for you to get the right figure, which is an adjustment. So you must take it in mind that we have two types of accrual. Accrual of the previous year brought to the current year, and accrual of the current year ending as the accounting period is being concluded. So let's look at the illustration quickly as we treat it. This is additional information. Take it that you have a question, and this is the additional information to the question. So additional information 1 says, insurance owing as at 31st December 2025. Take it that this is our current, year. So the current year ending, which is 2025, there was an insurance owing of 20,000. How do you treat it? You come here under the profit or loss extract. As you come under what is called operating expenses, that is taken that you come under the heading called operating expenses. Under operating expenses, you now pick the value of insurance. This value here is assumed. We assume that in the trial balance, the actual value of insurance that was given was 100,000 naira. Then this is when you come and pick the amount that have been accrued and then adjust. This is what your readjustment. The actual amount paid here in the trial balance we assume to be 100,000, which you go and pick from the trial balance given by the examiner or the question. Then you come and pick the 20,000 that was owing or accrued or in arrears in the current year, and then you add. Look at it. Now say 20,000 plus 100,000 give you 120,000. Then this is what is called adjustment. 20,000 that was owing the current year is added to the actual amount of insurance paid in the current year to give you 120,000, which become the actual amount that's supposed to be paid, which 100,000 was only paid. This is how to adjust owing of the current year. Let's really look at owing of the previous year, which most lenders don't know that it exists, but it is there. Where we have rent in arrears as at 31st December 2024, 10,000. Mind you, I say that the current year in my illustration is 2025, and the rent in arrears as at the previous year, which is 2024, this is not current year. In this case, what do? You come to the statement of your profit or loss. So the current rent paid was 150,000. While the rent in arrears is 10,000. We look at the difference here. The 10,000 here is not added. Why? Because this is rent in arrears of the previous year. So you cannot add it, but you deduct. That is the difference. If the arrears is that of the previous year, you are not expected to add it, but you are expected to deduct it. So in this case, we assume that the rent that was paid in the trial balance or given the trial balance was 150,000. So if there was arrears from the previous year brought forward, such arrears should not be added but deducted. As you can see, 10,000 minus 150 give you 140,000. This is how arrears or owing are treated. That of the current year is being added, while that of the previous year is being deducted. Let us see how it is treated in the statement of financial position. In the statement of financial position, owings or arrears are treated as current liabilities. But mind you, here I'm still emphasizing it's only owing of the current year that will appear here. Mind you, it is only owing of the current year that are treated as current liabilities. So here, if you look at this question, insurance was owing as of the current year, which is 20,000. Insurance owing as of the current year. Mind you, in my illustration, 2025 is the current year. So look at it. If you come under statement of financial position, under current liability, mind you, you are going to pick insurance owing or arrears and treat it as one of the current liabilities. Mind you, we are not taking the entire total. If you take 120,000 and use it, it is wrong. Neither if you take 100,000 and use it, is wrong. All we know is that what was owing in respect of insurance is 20,000, and it's that 20,000 that become a liability to the business. So 20,000 become insurance owing, which is a liability. But look at what happened here. Coming to rent of the one of the previous year, which was in arrears, it was treated in the profit or loss account as a deduction. But coming to statement of financial position, please don't bring it because it's no more a liability. The simple understanding is that rent was already owed in the previous year. Coming to the current year, the amount that was paid was more than what was supposed to be. So if you deduct the 10,000 away, then it means there was no more liability. So it cannot come as a liability again because it has already been settled. So owing of the previous year should not appear in statement of financial position. It should be only rent of the current, it only accruals or expenses owed in the current year that no matter appear in the statement of financial position as liabilities. Please take note of that. Let's look at the journal entries quickly here. When we talk about the journal entries, I told you that all adjustments must pass through the journal entry because this is where the whole thing will reflect in the ledger, and then it will help to prepare what is called adjusted trial balance, which we use in preparing the new financial statement that will incorporate all the adjustment and the account must balance. So if you come to prepare your journal entry, which I told you that most lenders don't even know that adjustments are being jeopardized, and they must be jeopardized so that it will reflect the double entry position as they will appear in the new adjusted trial balance. So if you come here, insurance that was paid will be debited 20,000. Then the insurance account, the actual amount, the amount that is owing as the insurance in the current year will be debited. While that of the accrued insurance, you now credit is how to do it. If there is owing of the current year in the journal, you are going to debit the 20,000 and the amount that is owing, and then you're going to credit the accrued amount, and then you have it here. Then you must narrate by saying, being to record insurance owing. This must happen because in accounting, it forms part of the procedure of accounting whereby you incorporate all the adjustments into the journal to help them reflect in the adjusted trial balance. So you must know how to treat it. Then finally, if you look at that of the rent in arrears, here the journal. This is a continuation of the journal. It's a continuation. So look at the continuation of this. Coming here, rent that was accrued should be debited. It's just like the opposite of what happened here. The accrual will not confess, will be debited, while the rent account will be credited in the journal. Then you must narrate by saying, being to record previous rent outstanding. This is previous year, whereby the accrued amount is being debited, while the actual amount owing is being credited, which is just like the opposite of the other one. So you must learn how to categorize all adjustment, which it is not commonly found in textbook, or most learners doesn't even know that it exists, but it must be there. And that is why I'm going to introduce it for you to understand. So if you're able to appreciate how this owing are being handled via the profit or loss extract or financial position, how they are being generalized, you have no issue at all in handling all this. If there's time, I'll still come back and prove how these appear in ledger to give you the new balances. But first, you have to generalize it before proving everything in the ledger. At a convenient time, I will come and prove all these journal entries as they appear in the ledger account via the adjustment to give the new balances in that very account. Don't forget to like my video, share and comment, because these are areas where most learners find it very difficult to handle so that their accounts will balance at the end of the day. I'm Chartered, your accounting tutor. Let's see in the next class where the other disturbing items like allowances for expected losses, bad debts, depreciation and other items will be treated. Don't forget, because these are going higher. As higher we go, most of them like provision for expected or allowance for expected losses, credit losses, students find it difficult, bad debt depreciation and many others. I am still going to treat it, so don't forget, follow up to get more on adjustment in accounting. Thank you and remain chartered.